Excuse me. Good morning, everybody. How's everybody doing on this lovely morning? Yeah, I have to get her to delete that from the CTM because it up every time I don't even go live. I just come into the live screen to basically situate a live stream, and it automatically posts it in the CTM Discord. So makes it a bit of a pain in the butt to do this because then I have to physically go in there and delete the stream. So, because this is only for channel members and Patreons. All right, guys. Good morning. Good morning. So, basically, I was just looking at the VIX this morning. I clicked on a YouTube ad, which is something I never do, but the guy was talking about a 96% win rate. And for the next 45 minutes, they proceeded to just basically tell me how good he is at trading, how much he's made, and told me about 500 other testimonials without ever giving a strategy away. So what it boils down to is he's selling a signal service. So I just want to tell you guys, especially if you're new at trying to learn how to trade, you're going to get bombarded with spam and scams. Those commercials, like, here, let me see if I can pull up this, just the picture of the ad real quick. Just give me a minute. Let me see if this is it. Right here it is. So that's the guy, right? And I'm not saying that he's a bad guy or anything, but just look at this stuff. 10x trading champion, audited annual returns 220% and 300% a year. That's an annual return. Earned $6.1 million in the last 7 years of trading alone. Blah, 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 blah. Nothing in this advert shows you the risk, right? And then I pull up this other picture and there it is. Right there, right? Here we go, bringing it in right here. These are some of the publications. Yes, I physically wasted 46 minutes of my life listening to this garbage. If you look down here while he's giving you all these testimonials and stuff, trying to get you to buy his signal service, you see this little disclaimer down here? The profits and performance shown are not typical and do not guarantee future trade results. They have to put that up there. No strategy is 96% effective. Not even his. I would love for him to show me actual IRS tax returns, and then I could link those up with physical trades taken. But yeah, it's what his strategy is he's trying to find over or cheap options, which it's, it can be a mathematical formula, but all you got to do is look at the VIX, right? The VIX is down. It's been going down. So right now, options are a bit cheap. I can't pull Thinkorswim up on this computer. I have it on this other laptop sitting over here to the right of me. But like just on Netflix alone for next Friday's expiration, the implied volatility is 28%. So I can remember when we were over here on the VIX back in March 2020, the implied volatility on Netflix was like 450%. So you do not want to buy options at 450% implied volatility. Options at a 28% implied volatility are still a bit expensive. But if you stretch out this VIX chart, you can see that it's not even at the lows. It's still kind of high. It just hasn't settled down from all of this capital influx that we had back in that liquidity crisis in March. So with the Fed investing money into the capital markets to keep them propped up and such, the VIX may never ever trade back down at these levels. We don't know, right? But as long as the S&P 500 is moving up, the VIX will continue to go lower. And if you are a premium buyer, a long options strategist, then now is the time where you want to maybe start looking at some options, right? When the VIX is down, that means the implied volatility is lower. Therefore, meaning you have a better chance on buying a cheap option. But just finding options cheap, maybe he has a mathematical formula for that. But I know one thing, signal services, they feed winners to half the people, and then the other half the people get the losers. And then they have a computer program that shifts the users over. So that way he can call literally, I don't know, say 5 losers in a row, but some people won't get losers because he gives the exact opposite position to half the people. So he may tell half the people to buy 106 calls, expiry, blah, blah, blah. But on the other half of the people, he's giving the exact opposite trade. Buy 106 puts with blah, blah, blah expiry. And that way he's 100%. But they just stagger the clients. Who gets the calls and who gets the puts. And it's the same way with trading stocks and option or Forex. If you go buy a signal service, they're going to call a buy and they're also going to call a sell. You may be getting a buy, you may be getting the sell, but obviously it's a freaking scam, guys. It's a scam. If you want to do what he's doing, just open 2 Forex accounts with the same amount of money. Make sure it's 2 different brokerages, say Oanda and I don't know, IG, right? Same amount of money. Take the exact opposite trade on the other account, right? That's all he's doing. That's what he's doing, and then he's feeding it out to them. So just be careful, guys. There's a lot of scams out there. There is no 100% hit rate accuracy trading model in the world. If there was, if he was able to hit 90% accuracy on his trades, he would not be selling anything because he would be able to physically print money. He could just go double up on every single time he wins and just reinvest that capital and keep doing that and doubling the account every single trade, and eventually he'd own an island. He would be the richest man in the world, but he's not, and he has to result into selling stuff to make an income. Why do you need an income if you can physically print money trading in the markets? This is why buying courses and all this stuff is useless. It's useless. I know it's a good business model for them, but if you can physically trade, really, legitimately do it, you can make a ton of money. You can. It's 90% in your head. And the other 10% of trading is going to be technical analysis. My goal is to teach the best technical analysis and the simplest technical analysis out there. But the VIX is low right now. This is the weekly closed. It's not a tradable, it is a tradable asset through options. So I guess buying and selling does make this thing move up and down. And you can see that it's at weekly support right now. So do you want to go in there and buy options now? Yeah, probably. You know what I'm saying? You could probably pick up some cheap options. And if you get a spike off this level, I wouldn't do it now because here was your spike off the level. The last time it traded down here, you already got your bounce. So had you bought any premium, cheap premium, like, you would have had to buy them 5 weeks out. On this spike here, you would have made money on your options, right? So that's how options basically work. There's a lot of other mathematical equations that goes into them. We will eventually get into options, guys. I leave options and penny stocks off of my YouTube channel because it's basically, I just want to teach people how to do technical analysis and Forex mainly and Bitcoin and all that stuff. So by me going out there and putting out my options positions and my what penny stocks I'm trading and all that stuff, then that just gives such a mixed signal to the channel. And I just wanted to focus on one thing. So eventually we will get into that stuff. I will teach you what I know of the options markets. Penny stocks is a very dangerous game. Very, very dangerous. High risk, but there is high reward if you are correct in knowing what you're doing. But basically the VIX is at a low. If you want to buy options, let it get lower. Like around the $13 area, $14 area, that would be a good spot to buy some options, right? For if you're YOLOing them or whatever, that would be the time to do it, as that's when your implied volatility is going to be lower. So, and a growing VIX, even if your stock does not move, even if your stock is absolutely sideways, if you get a spike in implied volatility, it physically makes the option value increase, right? and it's only because of the implied volatility going up. So you will actually make money on an option if the stock goes sideways, but there's a lot of risk in it because 90% of all options expire worthless for long option strategies. So yeah. All right, so moving on. I just had to get that rant off because I spent so much of my time today wasting trying to figure out what this guy's out there selling. So I imagine you're going to start seeing his commercials probably on my YouTube channel too. But I'm going to try to see if I can stop most of the scam commercials. I didn't know I could control the commercials that are played on the channel, so I'll have to look into that. All right, so Bitcoin, what are we doing today? Well, we're having a small bounce, and it's to be expected. It's to be expected because you're trading into support. Anytime you trade into support, you can expect a bounce. That's why I say these levels will offer tradable events. You know what I'm saying? Because that is, you can trade off the bounce, but just don't expect a whole lot of movement off the bounce because the trend is down. So basically today it's moving sideways. Yesterday I did a Discord in my Discord, not CTM, in my Discord. I went live for the people that were there, and we went over this move, or not that move, sorry, this move. Love you, baby. We went over this move right here, discussing this was the daily range for Bitcoin yesterday. And I basically told them, look, you're probably going to see some sideways price action for the rest of the day, because this daily move, this was your daily range expansion. So let me use my bar tool here. Let me get rid of all the drawings, and let's go back into where we were yesterday when I went live. We were roughly on that candle there. So this is what we were talking about. So this was your daily high. This is how price action works. These, from this move here down to this move down here, that is your daily range expansion. And as a short-term scalper, this is the type of move that we are trying to capitalize on, right? We don't want to buy it here and see all this happen all day, right? That's how many hours? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So that's 2 days right there of doing nothing but going sideways. That is when I say sideways or a choppy market. This is what I'm talking about. Is there opportunities to be making money in these? Absolutely. You sell resistance, you buy support. Does it always work? No. If you would have bought here at this hourly support, obviously you would have gotten stopped out. So some of the calls that I make are fantastic calls, but I make bad calls too, guys, right? So I mean, that's all it is. There's no wizardry in it, right? I'm selling resistance and buying off support 90% of the time. That's all I'm doing. And I'm looking for assets to where I might be able to find a decent daily range expansion, and I want to be on the side of that trade. So what I'm doing usually is I'm aiming for the daily low. If I'm going short, like if I was looking to take this Bitcoin trade, hang on a second, let me check what I'm dropping frames, but it's not too terribly bad. So, all right. So like if I'm looking to short Bitcoin, obviously this is hindsight, but just I'm saying a hypothetical here, right? Just to kind of get you on the same page. If I'm looking to take a short on Bitcoin, I want to take a short at resistance. I don't want to short it at support because there's a chance it could trade into support, and we know for a fact this right here is support. We know it because that hourly candle closed there. And that was the last time you got an hourly candle closing at that price. That's why this is an unsubjective way of finding support and resistance. I'm not calling that as support. The freaking market is, right? That candle closed at that price. And then this test, this test, this test were all tests of support, and then price traded away from it. Now, when you came back into it, you slammed through it. This is what you want to see on a support break. This is what you want to see. You want to see a big candle going through it. And you want to generally see it at least be the halfway point of that big candle going through your support and resistance level, as that will also verify that level in case price comes back to it. You can look to short that area with a stop loss, right? Only risking 1%. Because you may be wrong on that trade. and you don't just keep forcing your will upon the market, you get stopped out. You don't instantly reshort it again because you think he said this is support, therefore it must test it as resistance and roll over. That isn't the way the markets work. We know that this is support, absolutely. Is it a good place to possibly take a trade? Yep. Are you going to be right on that trade? Probably not. It's about getting a 40% win rate. If you risk 1% and on average make 2% on your winning trades, as long as you maintain a 40% accuracy rate, you will be a profitable trader. It's simple math. It's the human emotions and the bad decisions that get into people's ways that make them unprofitable. It's that. It's you. You get in your own way. The technicals are always going to be there, and they're always, sometimes they're going to work, sometimes they're not. So, but basically when we were talking about this over here, I digress. I got out of basically on another rant, but I was telling everybody, look, this is your daily high right there, right? Let me delete this line so when we go out to the daily, you can see what I'm talking about. And this is your daily low. So when I went to bed the night before last night, so Friday night, I went to bed, Bitcoin was putting in this bearish candle and it went down. And in this sequence of chop, what you do is you find the lowest bearish close. That's this one right there. So that is your support in this stuff. All right. So when this candle was put in and then traded back out and closed above your support on this retest, you could have taken a long, putting your stop down below this wick right here, not this wick, because then your spread from your entry to your stop would be massive. You would have to have price go all the way up here just to make that 2 to 1. So when I talk about favorable areas on the chart to get a risk to reward, this is one of those areas for a short side setup, right? But here's the thing. This is what happened. Resistance, 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 break. That's a break, right? So now if you're looking for a retest, you got smoked. But this smoked you so good that intraday price action, you probably traded back on a 5-minute candlestick chart pattern or chart. You probably traded, once you put in this move here, I'm almost willing to bet that on a 5-minute candle, you may have went back up and tested this. And that's when you could have gotten short. Stop above here. That's a win, right? So you ate one stop, then you made, well, on this trade, a big risk to reward. So you would have been risking that wick high, entered here. You're looking at like a 4 or a 5 to 1 risk to reward. So that's what I'm looking for when I say favorable risk to rewards. I want to find the spot on the chart when it's happening in real time that gives me the smallest stop possible in hopes of managing a nice intraday range expansion to the downside or to the upside. So if I'm looking for longs, I want to buy as close to support as I can, right? And my target will always be the daily high. If I'm looking for a short, I want to buy as close to resistance as possible. And my target will be daily low. So back to this. All right, this is your daily high, right? This is your daily low. This is your range expansion. Once this move was put in on the daily candle, you are no longer looking for trades on Bitcoin this day. Is it possible that it continues because it did have a lot of selling momentum? Yes, it's possible, but this was the move. That was the trade, and I will show you right here. Boom, there's your daily. Well, there's the low, so I was off a little bit. Wait a minute, what's going on? Am I even on the right one? Yeah, that doesn't work. So, oh, maybe I shut it off too quick. Oh, that's right. Okay, I see what's going on. I'm in bar replay. So this was the range expansion at that time I was making the video. So this was the daily. So go back into the daily chart and look how big that daily candle is. All right. So let me refresh this. Now, at that time when I was talking to them in the Discord, this is your daily range right here from this white line to this white line. At that point in time, this was the low of day. You can see we did trade a little bit lower, but then it was chopped the rest of the day. I'm not even exactly sure. Oh, never mind. But anyways, look at how big this candle's range is in comparison to this candle, this candle, this candle. See, this candle's range is bigger than this candle, and this candle. So is your daily range expanded? Yes. Does it have room to go lower? Probably, but just using your head, you can see that that's probably going to be the bulk of the move, right? For that daily range. So when I'm taking a trade, I'm only looking for one entry on that daily range expansion. One. If I get stopped out, I'm wrong, and I'm waiting till tomorrow to get in on a daily range expansion then, right? Because this one has already played out. So I didn't short Bitcoin, and I was not a part of this trade. When I woke up and was discussing it, technically I wasn't looking to get short or long, because here's your daily range. It's already played out. The rest of the day is more than likely going to trade sideways. So if you use your bar replay tool, you can see what it did for the rest of the day. Here we are, 1700. That's 5 o'clock p.m. Eastern Standard Time. You got another push lower. And then what? Here is 8 o'clock. This is a new daily right here somewhere, 8 o'clock. So 5, 6, 7, 8 o'clock. This is your new daily opening. This is your new daily open. So on this daily candle, this wick until this wick gets taken out is the low of day. All right. And that's how these candles form on a daily chart, weekly chart, monthly chart, hourly chart, 5-minute chart. There's 5 1-minute candles in a 5-minute chart. And this is how your candle ranges get formed. So me being a guy that's been trading a long time, I can look at the size of the daily candle, even if it's only 9 o'clock in the morning, and tell if there's any more juice on that lemon to squeeze. If the daily range at 9 a.m. in the morning is already bigger than yesterday's daily range, the chances of me taking a trade on that asset for that day are slim to none, because the move has already happened. It's already happened. I am now waiting for a new daily candle to start a new daily range, and with any luck and a little bit of skill and a lot of mental perseverance, I may find a decent entry for a new daily range expansion. And that's how I trade these markets, day in and day out. Day in and day out. So basically, here we are. This is yesterday's daily range. Well, this candle made it a little bit lower. And here we are in today's daily range. Like I said, this candle here was today's low of day. Still is. Boom, there's today's low of day. As of right now, here's today's high of day. You see how small this daily range is in comparison to this daily range? This is called an inside day. All right? On my channel, I have a video. If you're new to the channel, welcome and thank you for being a member. But if you're new, there is a playlist called "If a Beginner Trader Start Here." I outline all of this stuff for you guys. I don't know how advanced you are in your trading journey yet. You know what I'm saying? So I'm just broadly speaking about everything now to just basically get everybody on the same page as we go along in the future on this channel, because it's going to grow. Because I am teaching the absolute best technical analysis on the planet. And I'm not doing it for a fee. All right? So it will grow. But what we're looking for today, this is a small inside range candle, because here's yesterday's daily range. Here's today's. Can it break out and make a new high? Yeah. Can it make a new low? Yes. But since this range was a massive expansion, we're looking for an inside day today. It would be fantastic if Bitcoin stayed in this range all the way till 8 p.m., right? Because that's when the range closes, the daily range closes. Then we can look for a range expansion to the downside. Why the downside? Well, that's the trend. That's the near-term trend. It has to change. In order for it to change, you have to take out this swing high because that's your daily, right? You need to start making higher highs and higher lows on a daily before you can claim the trend is up. Look 3 days back. 3 days back. 3 days back. That's a pretty good rule of thumb. All right? 3 days back here, you got stopped out because you're choppy, you're range bound. But in a trend, 3 days, 1, 2, 3, you're looking for short setups. Boom. High of wick. The top as possible, close to resistance. Boom. Those are the trades you're looking for. All right? So with all that being said, I'm not yelling at you guys. I apologize. I'm just a little bit fired up. Let's go to what I had planned originally for you. Here we go. Pound USD. All right. If you watched Thursday morning's live stream, I only do live streams on Tuesdays and Thursday mornings at 5:30 a.m. Eastern Standard Time. I'm basically looking at the Forex markets before the New York Open. So that way, one and the most main reason why is because my internet is not throttled that early in the morning. I have really good signal. And then B, it's before the New York Open. So you can go back at the end of the day and look and see if there's validity in what I'm saying. But we were looking at the dollar, right? Let me go to the dollar real quick and then I will explain this trade in depth. Here was the dollar. Here is that target that I laid out in that video that morning, right? I said, this is my target. I had a bearish target too, down here. Price was trading in the middle of the range. We were consolidating at lows. And this is a massive, massive low. This is a quarterly low, right? You are at a quarterly low. You traded for weeks down here without being able to go lower. This was your lowest close. Boom. So that's your support. Look what happened the very next day. Big bullish move to the upside. This is not a pullback. This took out that day's high. So now your trend is up. This is a pullback into support. Still, this is your support. In order for this trend to continue, this support and this low needs to be taken out. We did not do that. We traded into support. We moved higher. We put in this fake out. This is why I say wicks do not mean selling pressure. But I bet you have a YouTube guy that you're subscribed to that would have said, this is selling pressure. See the big wick? The sellers got involved and pushed it back down. Here, see? So we're looking to go short on the DXY, looking for... No. This is a target, a bullish target, right? Because you're in an uptrend. This is a pullback to support, held support. Then you got a bullish move off of support with a green close on the day. That's bullish. This was bullish. This on a smaller term time frame is a bullish move and a pullback into support, which was resistance, correct? What is resistance? Your highest bullish close. Here you go. Bullish move up. Smoke target. New target. This target's done. This is a pullback. What is it pulling back to? Old support or old resistance. This bullish close. Look at this. Boom. Boom. You're testing support. So on this day, I was looking for this target. I even said, do I think this target will get hit today? It's probable that it won't because that's a big range. But I'm looking to situate myself on the euro or the pound for a short for this to play out. And this will be my target. And then on the pound dollar and the euro dollar, I went in and explained, right? So we know this target was hit. Now there is no high probable trade. With that being said, until this daily low gets a close below it, you are still in an uptrend. This is just a pullback. All right? This must get taken out with a close before you can say this trend is over, right? See, look how the market works. You got a higher push, you're getting a pullback. You may trade down for a couple days. Boom, another expansion to the upside. Where's our next target? Boom, right there, 90 spot, 80. That's your next bullish target. All right? That remains the next bullish target until this gets a close below it. Then we know the market's changing. So let's go into the euro. Here's the euro USD. I'm going to go to an 8-hour chart because that's the chart I was looking at in the video. Here was where we were trading in the video. We were putting in, this was at 6 o'clock a.m. Eastern Standard Time before the New York Open. All right. We were trading at support. This bearish candle was setting at support right here. So I specifically said, I know I'm looking for a short on the euro USD or the pound USD because I'm looking for bullish action on the dollar today. Do I want to get short on the euro when it's at support? Nope. You do not short at support ever. That is a good way to get wrecked. So what did I do? I go over here and I find pound dollar. What were we doing? This is the day. Right there's your 8-hour. Let's get rid of that. Start anew. Right here. Boom. So we were green on this candle. Right? This candle was pushing up. Right here. It was green. Moving higher. And I said, I'm looking to take this short at the New York Open. If we get a push above this wick, I am going to get short. I will be targeting this candle's low. Will it hit there today? Might not, but I'll be situated for it for continuation to the downside just until that target's taken out. That's how we professional traders work. That's how we do it, guys. We are not buying highs. We are looking for opportunities in the market, and we're looking to take those highest probable opportunities. I still lose trades, all right? I still lose them. Sometimes I'm wrong. These markets are random. They're 100% random. Order flow drives the market. Order flow. So if the order flow is bullish for the day, you're going to have a bullish day. If the order flow is bearish on the day, you're going to have a bearish day. This looks bullish because it's trading up, but we wait for closes. I don't wait for an 8-hour close if I'm taking a trade. Sometimes I will just bam, hit it. But I didn't here because I know if we do get a push above that wick, we're going to stop out a lot of shorts. A lot of already people that got short, they're going to have their stop sitting right there, and those are higher buyers. So you have a lot of higher buyers in the market. What buyers, a lot of inflow of buy orders will cause a bullish order flow. If for just a second even, it will cause a bigger spike, all right? Because people like me are selling into those bullish orders coming into the markets. And a bigger person than me, like a hedge fund or an investment bank, they need a lot of buy orders to sell into that. All right? It's got nothing to do with the news. Nothing. They want you to think the news moves the market. I put this out before the news, 2 hours before the news. The news coming out didn't affect my decision at all. At all. This was the setup on the day, right? Let's play it out. This is my entry. That is my exact entry. one spot, 41934. I will go into a 5-minute chart and show it to you. Look at this. Closed red. I know I'm in good shape at this point. Boom. There it is. Target, 2/3 position off. Stop, down to break even. Next day, I'm stopped. Right here. Boom. I even said on Twitter, do not look for continuation. This asset is bullish. This asset's bullish. I could see the NFP news coming out and putting a bid under this stuff, and we could absolutely see the entire move retraced. And I put that out Thursday evening. And that's what happened, right? That's exactly what happened. I did not trade NFP. I have multiple Forex accounts, which gives me the ability to be able to be long on one asset and still short that same asset on a different account, right? I am long on the pound from down here. Since the last NFP, I am still holding that position long. I am looking for the pound to break out and move much, much higher for the rest of 2021. That's what I'm looking for. If it rejects here and takes out a quarterly level that I'm watching, then we will look for short side setups on the pound for the rest of the year, right? Because this market's trending right now. All right? So that's how that trade worked out. So let's go into a 5-minute chart. Excuse me, so I can show you my setup. All right, so here we are. This is the day right here. All right, so where is our daily range? I got a lot of stuff on here that I don't think I need. I don't need that line. I don't need this line anymore. Just bear with me. I promise. It's invaluable info. So here's 4 a.m. This is your London Open, right? London Open. London usually sets the high or the low of day. It doesn't always, but it usually does. This was a massive fake out. All right, here's your Asian session right here. Trading sideways with a bit of up, right? So people are going to get bullish when they start to see that. Then it drops off, comes in at the London Open. This is when the most volume of the day gets influxed into the markets. You get a bullish continuation. You take out high of day. Not, it was yesterday's day. It was Wednesday's day. All right. Wednesday's high of day got taken out. So anybody that was short from here is gone. All right. That wick that I was talking about, that 8-hour wick, this is the purge. I mean, this is the area right here. The reason is because when you had this sell-off, you had this little bounce, and then you got continuation to the downside. So anybody that got short in any of this price action right here, these are the people I was targeting. Their stops would have been above that wick, right? So here we are on Thursday. We get this push up. I'm not looking to get long down here. I'm waiting until I only take trades from 7 to 10 a.m. Eastern Standard Time. Every now and then I might get in earlier than 7, but I never get in after 10 because the trade has already happened. It's already happened. All right? You just missed it. This is why I can't understand. Well, I don't get FOMO because I got experience, but you won't have it either anymore once you start to learn my strategies. This, you already know at 10 o'clock the trade's already happened. So there's no point in you staring at the freaking screens anymore. You can close your PC down and walk away. All right, here you go, right here. This move into that area. That's what I wanted to see. Did I short that? Nope. Why not? I wanted price to show me that it wants to trade away from that level, because this could have been a small pullback and then another continuation to the upside. I have no clue. I can't read the markets. I mean, I can't see the future. So I'm waiting. This is the level I'm watching, and I want to see how price reacts at that level. Traded down. Boom. Not only did it just trade down, It traded all the way down to the last support. This was last support right here. You traded all the way down to it. Lovely. I went straight into the CTM room, in the scalping room, and I said, I have a limit sell set, one spot, 41934. I put the limit sell order in here when this happened. All right? I put it ahead of this little candle right there because this gives me a risk to reward. If we get a 5-minute close above this last bullish up closing candle, then I am probably wrong. I have my stop above this wick high. I gave it a little bit of room because the news was about to come out, right? That news came out at 8 o'clock a.m. So I got entered at 7:35 a.m. This push up triggered me into the trade, and you can see you never did get another 5-minute close above my entry. That's what you want to see as a trader. And another little tip for you out there, if you are practicing, if you've taken a trade at 7:30 or 8 o'clock in the morning, and if at 9 o'clock in the morning price is at or above your entry, just close the trade out. You're wrong, or it's going to be choppy. When you're right on this, this is what happens. Trades away. This told me I'm right. Low of day right here, but I don't take targets right at the low of day. I find the last bearish candle, which is this one, and I put my take profit, whatever my spread is. If my spread is 1.8 pips, 1.8 pips above that last bearish candle, because that's a Heath level. Those levels offer support. That's a good spot for buyers to reinitiate positions on this market. And it's trading at low of day. So the risk to reward is better for those bulls, right? That's why I take targets. So on this push lower right here, boom, this candle took me out of the trade. 2/3 of the position size. Now my stop is at break even. All right. So I still have 1/3 of the original position on. That's about the same size of a position you would take if you were looking for a swing trade. Here you go. I got bearish continuation. It's fantastic. It doesn't always happen, but it did. Did I take profits down there? Nope. All of this was unrealized P&L. This was the trade that mattered. This one. I was looking for a green trade on the day. This was a 6-to-1 risk to well, not quite 6-to-1. It was like 4-to-1 risk to reward. So if I'm risking 1%, I made roughly 3.6% because I left 2/3 of the position on. 3.6% on a trade, that's a fantastic day. If you can do that one time a week consistently for the rest of your life, you will never have to work for nobody again. 1% per week is a fantastic return. All right? You can double your account so quick. If you do 1% per day, if you get that good, you can double your account every 38 days. Every 38 days, you can double your account. That means you can double your account twice and a half each year. So it's about the math. But that's the trade I was looking for. That's the trade I wanted. I was okay to lose all of this unrealized P&L because I'm not expecting anything to happen once I've taken profits. Once I'm out of the trade, I've wiped my hands of it. I'm done. It's over. Day is over with. I'm good to go, right? So whatever happens, happens. If it does continue to go lower, then fantastic. Then I will start to manage the trade like a swing trade. If it comes back up and stops me out the next day, I don't care, right? And especially on this asset because I'm long from way down low, still on a 1/3% of an original swing day trade. Not swing trade, day trade. Of this magnitude. This is exactly what I was doing. Now here's another little thing right here because you will hear, and then I'll answer some questions. I apologize, this has been a fantastically huge rant, but it's worth it. It's worth it. So for all the people that like to say support and resistance don't work in the markets, retests, resumptions don't happen in the markets. They don't happen all the time, but they happen a lot. All right. What's this double line that I'm looking at here? Right. Well, This is when we had this bullish impulse to the upside. This is your daily range expansion. You're not looking for trades up here. This is your daily candles range. It's already happened. But look at this last 5-minute candle right here. That's your lowest closing 5-minute candle. And I outlined the close of that candle. Price traded away. Look at this test. Now this happened at 4 o'clock in the day, so I wouldn't have taken that trade. But tell me that's not a retest, resume, right? All of these, they do it all the time. But watch this when I pull over. Look at this. When price sliced right through it. This is validating my level. It's validating it because the market, it's not just me looking at that level, it's other big people because they put so much volume that it sliced right through it. No retest, none. No retest, none. Just keep watching. Oh my God. This candle's high of day. It's over here if you don't know. Right there. Right? Candles high of day. One spot. 42032. This one spot. 42032. I had that line in from 4 days ago. It works, guys. You just have to figure out a way to get out of your own way and have patience. Patience. You're not going to learn this stuff. It took me years and years and years to learn this. I didn't have no mentor. I didn't have no teacher. I was doing it on my own. I don't subscribe to YouTube traders. All right? They're all full of shit. All of them. Name another trader that has as many trades shown on their YouTube channel as I've got just in old videos. I used to do daily trade recaps when I first started this channel. Nobody watched them, so I quit doing them, right? So that's what it is. But I have probably 40 or 50 trades that are real money trades taken, and I go over them, what I was looking for, why I took it, right? There's a wealth of knowledge on this YouTube channel, and old videos even. I'm just not that charismatic of a person. But that was the trade right over here. I am bullish on the pound moving forward. I can take intraday scalps because I'm only looking for a daily range expansion. So I'm looking for that 1 day's range to expand, right? So if I'm longer term bullish on an asset, then it's okay to take a short as long as, you know, you're not looking for a massive gain. This is why we're bullish on the pound. This is a quarterly chart. You've been testing highs of this trend line. This was the first time you broke out above it, okay? You retested it, you're trading higher. This is a trending candle. It's trying to be a trending candle. There is still a quarterly target right above us. 143770. This is a target. So we're looking for this to continue. Even if you put it on log, this is why trend lines are super subjective. You're just now testing the trend line. Last quarter you tested it and failed. This quarter you're testing it again. So a close above this is epic. This is your quarterly resistance, and this is the level I'm watching. If we get a close below this quarterly resistance and back below this stuff down here, I will be bearish on the pound for the rest of the year. All right, for the rest of the year. So let me answer some questions. What's up? Yeah, I'm gonna fix that in the Discord, in the CTM Discord. What's up? Says Kenny Brockowitz. Hello, good morning, good morning. What's up, Kimberly? Sorry about not NOIA or NIOA, Kimberly. It got absolutely wrecked. I'm here to listen, but if you can look at KCS and USDT, yeah, I'll go look at it for you. KCS, USDT, KuCoin, because I know you're a fan of KuCoin. Yeah, this thing is just absolutely crushing it. I think I looked at this yesterday. I guess it wasn't the one I thought it was. There's one asset that's actually trading at highs, or was yesterday. 78% off. So the trend is to the downside. All right, the near-term trend. It's the daily chart. Here is your lower high. This was your lower low. On this candle's pierce through, you created the first successful lower high and lower low. And the trend is basically sideways at this point. So with this bit of knowledge now, you have to assume that you will see an increased amount of selling. Here is our first supply zone on it right here. You almost tested it the other day. You did not, but you almost tested it, right? You will see an increased amount of selling there. If you're bullish on this asset, you must get a daily closure above it. You must get a retest of it. You must get continuation up off of it. Other than that, this is still not looking so good, right? I use fibs for legs of price. So like this high to this low is one swoop leg of price to the downside. So this would be like a monthly expansion, range expansion, right? So if I'm looking for this range expansion right here, I'm looking at this at the 382, the 50, and the 618. At each one of those areas, longer term investors, institutions, finance, banks, all those people, if they're long this, they will look to exit as they see the trend has changed. So in their opinion, this was the high here for now. They will exit their positions up here, right? At these three areas. On this one, the 380.82, you've already pierced above it. So nobody's selling yet. Here's your 50 at 10.16, and then there's your 618 at 11.52. At those areas, you can expect some increased selling. All right? But it doesn't mean that I'm looking for lower lows. I'm just saying don't take bullish positions into this area. All right? If you take a bullish position down here, you are looking to exit once you take out your target, which only should be high of day. Your previous high of day, because that's resistance. So you're looking to exit that bullish trade once you get into that. You may see a lot more selling up here. You may not, but you may. The only way you don't see a massive push lower once it gets to that 618 is if they think it's going to go higher. That's the only way. If they think the top is in, they will exit their positions, as that is the way to trend trade. And no matter what anybody tells you, that's a massive, massive move to the downside in a short amount of time, aka blow off move, or exhaustion risk. It can absolutely be bought, and it can absolutely make higher highs continue in the bullish trend, but we're not in the bullish trend anymore. You are longer term, you are in a bullish trend. But near term, you are in a downtrend. And near term price usually drives the market. It's just been my experience. But yeah, if you're looking for bullish entries, you definitely want to make sure you're taking profits ahead of those two levels up there. And I'll show you on ADA, because I got short on ADA, right? Because of that the other day. I'm watching all of these things. This is all I do every single day, all day long, is look at charts and look for upcoming opportunities. This also happened on Thursday. So not only did I crush that pound trade, I also crushed this trade. Somebody else was looking at this, and I said, look for increased selling at the 618. For some reason, that's not right. There we go. Here you go. You got a perfect test of it. I got short on that test. Boom. Took profits on this move lower. And it was a big one because I was levered up. It's a small account, so I don't care to lose the whole account. But I always trade with a stop. So my trades are never, ever, ever going to be risking more than 1 or 2% per trade, ever. So if this thing would have had a massive spike to the upside and taken me out, I would have only lost 2% on the trade, right? But I made like 40 or 50%. That's a big move. to the and all because of my previous knowledge of what generally happens when you get blow off tops. It happened last time in Bitcoin's price action. Just go back and look at it. I'm the only YouTuber out there calling that a blow off top, right? Jordan doesn't think it's a blow off top. So his definition and my definition, what a blow off top are, is different. And it's okay. He's still my friend. I love the man to death, and he just had a new baby boy. So congrats to him. But yeah, I was looking for this to see increased amount of selling happening as people who were long in this trend from lower, they will not sell when there's panic selling. I don't either. It's stupid. It's ridiculous. If you bought here and you don't have a stop loss, then yes, you must sell. Otherwise, you're going to get liquidated and probably owe your brokerage account millions of dollars, depending on how levered up your trade was. But you get what I'm saying. If you're lower, you don't have to do anything. And I'm way lower on Bitcoin, so I'm not panic selling ever. If I was going to exit the position, I would wait on a 618 test. And if we don't get it, then oh well, I'm wrong, right? Because I don't know that it's going to happen. But I know some people will be exiting there. Now, it looks like it's already finding support. That's what you want to see. This is an inside day. This is an inside day of this day. So the last 3 days, order flow is down. So you will be looking for bearish continuation until what? That's right. Until you take out this candle's high on a closing basis, as that will mean the near-term trend has shifted. The near-term order flow has rotated. All right. So yeah. Just wait, look for those areas. Those are big, important areas. Do not get long in front of them. He thoughts on Doge. Yeah, I'm watching it. I'm looking for an entry on it. It's trading sideways. It's an inside day today. A very, very small inside day. So this is our daily range. This was that the other day. Here is a Heath level, aka demand zone, support zone, whatever you want to call it. Order block. I don't care what you guys want to call them. It's up to you. There's one here too, but you never got a daily close below this one, so this one is still intact. But it looks like order flow is moving lower. So I am looking for this to break. When it breaks, I will be looking for pullbacks to get short. All right, I can't get short ahead of support. I just can't do it. And this daily range is trading inside of this daily range, and today's daily range is trading inside of yesterday's. So you're forming a triangle, right? You're chopping around. You haven't taken out this day's high or this day's low, so those will be targets eventually. I just can't take it here at support because this could hold and you could get a more higher push because your near-term order flow from this is up. There was your daily support or resistance, and you took it out on a daily closing basis. So pullbacks pulling in to find support. So I'm not necessarily short unless we lose this area. As then the bulls that are looking to buy it here it will be over. You know what I'm saying? That will be a bull trap, essentially. But if it's going to continue from here, that's why I'm not looking to get short down here. Will I look to get short up here or here? Possibly. Yeah, as the risk to reward is better up there to go lower, right? Because I know I can trade it all the way back down to support if it wants to remain in a choppy environment. And if it's a bullish continuation, then obviously we get stopped out. That's the way trading works. But right now, there's nothing to do on it. It's chopping around in a tight little range. Where is his Lambo? It's in the garage, Wes. It's in the garage. No, I'm joking. I don't have a Lambo, guys. I'm a very humble guy. Very humble. Where is... Oh, there it is. Cheesy smile. I can feel authenticity. This is how I found CTM and you. Well, congrats and thank you for being here. Average 177%. Right? I also need to fix those damn emojis. That white box is supposed to be there. All right. Let's see. Mods. How do I access Heath's Discord? There's a link in the description for it. on the Patreon. I'm trying to see if there's any questions. No, Michelle, the prop firm level is just for these live streams. It's just for this Sunday live stream. Because I put a lot of info in these things, so the Discord I basically just started it a little while ago. It's not big. There's not many people in it, and that's fine with me if it stays like that. It's actually easier. I'm not looking to do anything with it. There's a lot of people that aren't in CTM, and they kept emailing me asking me for Discord access, and I can't give them Discord access to CTM. They have to go through Jordan for that. So I set one up for me, basically, so they could have access if they wanted to. 5,000 subscribers, says Ajit. Yes, that's freaking amazing. I can't believe that, man. I cannot believe that, because I'm like not the kind of guy that's looking to do that. It's actually a lot of work to answer questions and stuff, but I can't believe it. It's fantastic. It looks like it's growing. So we'll see what happens. D, thank you for being here, my friend. Love the fire. Good morning, big girl. Oh wait, what's going on here? It just jumped. All right, I think that's where it was. There it was. Good morning, Planet Braid. 38 days. Yeah, you can, but I mean, when I first started the channel, I was gonna do it just for basically maybe people would want to come watch the channel for that reason. But I screwed up and caught the pound yen trade and doubled the account in like a week. So I was like, well, do I want to start all over again and try to do it? Because I was already like so many days into the challenge. And then I accidentally caught the pound yen and it doubled the account because of that trade. So I was like, well, I just stopped, right? Because I'm not actually going to help anybody by me doing that anyways. It's not. I mean, you got to learn this stuff. You got to learn what support is, what resistance is, and getting the market bias is the hardest thing to get, right? To find out what order flow is doing. That's the hardest part, because there's a lot of games played. And since the market's random, no strategy can ever be 100% because of the randomness of the market. Yeah, how did you know that 5-minute candle on the pound was candle in play? I was taking the short based on other information, right? But I go back and I look and I see what happens in other days. I know that was the last 5-minute close since before price traded away. And then when you had that big bearish move, you sliced right through that level without retesting it. So I figured somewhere down the road, price would go right back up and test that little baby. And that's where you want to get short. And that's what happened. Right? That's what happened. So that's how. Do you have any tips for people who can trade London session? And do you think I can trade both London and New York sessions to maximize opportunities? Yes, you can. But with that, I'm going to say be very careful. All right. As in a trending market, the London session may put in the low of day and you could buy it. And New York just comes in and the trend follows through and you get more bullish continuation. The reason I don't wake up for the London session is because in a 24-hour trading market, you have 3 opens. You have an Asian open, a London open, and a New York open. The New York open is the last open of the day. So that's when the last volume of the day is coming in. So that's the reason I like the New York session better. There are a lot of very profitable traders out there who only trade the London session because they know that the London session creates the high or low of day a lot. Now, the hard part about trading at the London Open is it the high of day that we're making or is it the low of day that we're making? That's the difficult part. But if you can learn a way to decipher that, maybe using what I'm teaching or maybe learn something your own way, you can absolutely make a fantastically profitable strategy just trading the London Open as the high or low of day. Let's just go look back. I mean, when in doubt, just look back. I'll put it on a 4-hour candle. I just picked USD. Nah, it's not a very good trending market. Let's go in markets that we know have been trending. And I'll show you what I'm talking about. Here we go. Remove drawings. 4 hours. So right here is 13. This is the 1 o'clock p.m. candle. The market closed at 5. So what we're looking for are the 1 a.m. candles. Here is your 1 a.m. candle. The reason being is because that 1 a.m. candle goes all the way to 5 a.m. We know the New York or the London Open is at 3 a.m. So the 3 a.m. is inside of the. Here's your 1 a.m. London Open candle, low of day. All right, let's go back further. 13,951. London, was it the high of day? No. 5. New York came in and took out the London high of day. That's a stop run. Bearish continuation. So it doesn't always work. Had you had your stop above this swing high, it would have worked, right? Let's go to the next one. 13.95, 1 a.m. This candle, is it the low of day or the high of day? Nope, not the low or high of day. Technically, it's the high of day if you go from 12 to 12, but we know that the Forex market candles open at 5 p.m. Eastern Standard Time, so your high of day was up here. So in this instance, did not work, all right? But you would have known that going into it because you would have been like way down here at close to 5 a.m. So you'd be like, well, the trend is clearly down and we're taking out supports, so it's probably not going to be the low of day. You know what I mean? You can just use your head a little bit. But yeah, and I'm not going to do this all day, but you get the point. 1 a.m., this was not the high of day either. So yeah, it doesn't work all the time, but it does work a lot of the times. A lot of the times, especially in a trending market. This is kind of choppy because you're at the highs, right? You're at the quarterly highs. So we're looking for something massive to happen here, guys. Something massive. Your quarterly highs. Quarterly continuation to the upside. Are we going to be trading up for the rest of the year on the dollar? Or are we going to be trading down for the rest of the year on the dollar? We got 24 days left on this quarterly candle, and I can't wait. Because in my opinion, that's going to be some of the fantasticest trading there is. Because you're probably going to be able to get situated for a fantastic trend either way, right? If it rejects up here and starts to head lower, then we're going to be looking for short side setups. But it looks to me like it's trying to go higher. This was just a simple pullback. You're already trading back up into it. So you got all month to fake people out so far. So yeah, that's what we're waiting on though. Just think of it this way, Planet Braid. Even if it takes you 5 years to learn something that can potentially change your life, is it worth the wait and is it worth the work? It was for me. You know what I'm saying? It was for me. What motivated me is New York City and Manhattan. Those massive buildings are built upon trading these markets. So there is money to be made. The financial markets is where everybody's money is. So we just have to figure out a way to take some of it. Could you please look at pound yen? Thank you. Yep. Let's go look at it, Leon. It was bullish. I don't know what it did after Friday, but it was bullish. We had a breakout and it's consolidating. It's trying to find support for maybe bullish continuation. It's extremely extended. This was my best trade of the year. This was the trade right here. This trade made my whole year. All right. And this was the trade that screwed up the small account challenge because I got in long down here, maxed like 50x with leverage, and yeah, it simply got doubled multiple times. But my main account did fantastic as well. I took it as a day trade, and yep, this happened to the rest of the 1/3 position. So this was a nice trade. Fantastic. Just went straight up for like half a year. It was great. So you're extremely extended. You know what I'm saying? It's been trending straight up. Can it continue? Yeah, it can. Your momentum is still bullish. Let's see if we're putting any divergences in. Yeah, there's divergences there, but they're longer term divergences. So like, I don't like looking at long term divergence. If I'm gonna find divergence, I want to see it like in the near term. You don't have it, essentially. You don't have it. So yeah. Yep, it could continue higher, man. It's got a lot of momentum to the upside. But if you lose that daily 21, I would stop looking for bullish entries. That's just the way I kind of do it, because it kind of keeps me away from buying overextended markets, right? If the 21 starts to turn around, and only on the daily. I only look at the RSI and moving averages on the daily time frame, and I just look at them for a split second to see where they are in relationship to price. Because if the moving average is way down here and price is way up here, I'm probably not looking to get long. Because there will be a return to the mean. There will be. When it happens is anybody's guess, but eventually you will get that downside push to return to the mean. There are algos and bots that are programmed to make that happen. So I don't extended markets. I like buying retesting markets. Like this market would be okay to buy as long as it's not closing a daily candle below 154.510. If you get that, then you're heading down to 153.911, or actually this candle's closed because it's the lowest one. That's your support, 153.810. You break that, you get the gist of it, right? But here's the thing also. See, I look for where people are in the markets. So, in my opinion, this is a bearish target right here. If this starts to trade lower, that will be a target. So I would take this short, aiming at that. So like, I'm an intraday scalper, so I don't necessarily have to just stay on with the trend, right? But this is the thing. Once that liquidity gets taken out, like a wick through it, if the daily closes back above, that's a fantastic buying opportunity. Because what you've done is you just went lower to trigger out all the over leveraged longs. And then you can probably find support and head higher if the market's going to continue higher. Those are fantastic spots to look for entries. But those are the kind of entries that you must wait for. You can't just take a buy right there, because it will have a shit ton of momentum heading lower. So what you do is you wait for a wick, go through it, and then a daily closure back above it. And then if a retest comes in, then I would be looking for bullish entries using that wick as my stop loss. Looking for possibly all the way up here to be retested again eventually, if that happens. If you get a daily closure below that, they are not purging liquidity. They are running the market lower. And you could target all the way down to here. But that's neither here nor there, because that's way in the future, right? But that's what I'm looking for most of the time. So it's a little bit extended to reiterate. Watch this playlist, the support and resistance videos. Yeah, I'm going to put more videos out, guys, but the channel's been growing so fast and I've been answering so many questions. It's like I don't have time to do it. But I will make time. That's a beginner playlist. Yeah, it's a good spot to start. I'm not... You know what I'm saying? It's a good spot to start. The videos aren't super long either. Alright. Appreciate it, man. Alright. Hi, Heath. I actually asked this during your Discord live stream yesterday, but I'm not sure if you answered it because I had to leave my computer for a while. Does the Heath level work because people who started their order went into the wrong direction and then exited their position at break even, therefore creating momentum on opposite direction? Okay. So for me to best explain this, I'm going to go back to Bitcoin because it worked perfectly on that, right? I'm going to go back into the intraday charts, because if intraday price action, intraday order flow is moving the markets, right? That's what creates the candles, the daily ranges, is intraday order flow. What people are doing right now. Who's buying? Who's selling? Are the buyers more aggressive? Are the sellers more aggressive? Yada, yada, yada. So right here, right, if we're looking for shorts up here, okay, this is going to be our target, all right? This one first, but this one second. So let me get rid of all the lines as to not confuse you. Here is your target for a short side set up here. Stop above the wick high, right? So here is an order block. This is the reason we are looking for short side setups here. All right, and look how freaking perfect that is. Well, anyways, I digress. This is your target. So what happens is when you start to get to your target, you have a lot of momentum because you have cascading things happening at the same time. You have breakout sellers jumping in, adding selling pressure to the markets. You have big market participants sitting up here with sell orders. We do not know if those sell orders are shorts or if they're just exiting. Either way, that puts an increased amount of selling. And I don't mean more selling than buying, because there is a buy order for every sell order thanks to the market makers. The market makers provide liquidity on the bid and on the ask. So they don't care about direction. They do that so that way anybody can buy at any price and anybody can sell at any price. But bigger institutions will use that to their advantage, as they will soak up the buy orders if they are looking to sell. And then boom, once they have exhausted that supply of buy orders, you get a repricing. All right, that's what's happening. The market is doing a rapid reprice. It's pushing lower. So when it starts pushing lower, you start triggering out stop losses that are on this side of this price action. They are sell orders because these people got long looking for bullish continuation. So their stop loss is a sell order. That makes them a lower seller by default. They are a seller at a lower price. Well, they want to buy from lower sellers. Like I put this example out in the Discord yesterday. If you're looking for a laptop and someone is selling one for $500 and then I'm selling one for $250 and it's the exact same laptop as that other guy's, same exact thing, which one are you going to buy? Mine. Why? Because I'm a lower seller. So the market participants want to buy from the lowest sellers. That's why we're heading lower. So what happens is you come down here with all this increased selling pressure, all these orders just firing away. It's the aggressiveness of the selling that forces price down. So if you can't have more sellers than buyers in a market, you can have a rapid advance of sellers. Does that make sense? Like sell orders are just firing into the markets by the millions. And here you go. You're getting a massive repricing to the downside. Anybody that got short here, that's targeting here, they're exiting their position. How does a short seller exit their position? By buying the market back. So when you get to these levels here, you get a massive influx of buy orders starting to come in from people exiting shorts, as well as new buyers stepping in because now they're buying at a lower price. This creates an order block or a chunk of price from 36,688 to 36,052 that situates a bunch of unfilled orders at these specific areas. Why are they unfilled? Because price just moved away from it too quickly. So price will go back up there to get those orders. So I don't know if they will hold as resistance or support. What I'm counting on is the market to come back to collect those orders. And if they're going to continue with the near-term trend, I'm looking for short side setups at that area, looking for lower continuation. So I'm waiting for the market to come back and tap into any orders that got unfilled here, because this is a discrepancy. And with a repricing like this, you may not roll over here, right? So here is a massive range candle. Watch the midpoint of this candle. That would be also a good spot to look for possible short side sets. Roughly right there. And it just happens to coincide nicely with another Heath level right there. Boom. That would have been and or should have been support if the market was going to have bullish continuation. You just blasted right through that. So I'm not necessarily looking to get short here. Also, we have tested this level, tested, tested while making higher lows. This time you made a lower low, so it's kind of iffy now. It could possibly roll over, but I could see a spike all the way up to 37, 112, and then a continuation to the downside. But if you get an hourly close above that, then you're going higher, right? And then you will start to look for this area to hold as support. And that's just how I do it. That's all I'm doing. I hope that explanation works. I really do. Because I don't know how else to explain it. The market's moving based on the speed of orders coming in. If the buyers are more aggressive, then the price is going to go higher. If the sellers are more aggressive, then the price is going to go lower. And with shorting, the sell orders can be sells and they can be legit opening positions. It's just one of those things. It's hard to wrap your head around. And computers control it. And price is fractal. I mean, there's a million reasons why it works, but I can't give you an exact definitive answer because everything in the market is random. It's 100% random. Technical analysis just basically gives you areas to watch that may or may not give you a higher probable chance of entering a trade. That's all it does. That is it. That's all it is. People rely way too much on technical analysis, and then when it starts to break apart or it doesn't work, they start freaking out over trading and getting emotional and all this and other stuff, and that's when they start losing money. It ain't because their technical analysis didn't work, because it will work eventually again. It will. It just, the market participants were thinking differently than you were. So, yeah, I mean, it's mostly mental. It's you versus you in this trying to get profitable. You are welcome. Yeah, I gotta get ready for I gotta do some other things and stuff, but I hope this was a good session, guys. I mean, I know I was on a big rant, but it's information that you need to know in order to take further steps forward in your journey to trade. I mean, these are basic things that you need to know that you're not going to find on other YouTube channels. They don't know themselves. In this day and age, mostly every YouTuber is not a trader. They're more of internet marketers, right? Internet marketers. They sell courses, they sell books, they direct you to their websites, yada 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 yada. That's how they make their money. You are a client to them, and they use technical analysis to draw you in. But they themselves, they don't know, right? And it's disgusting, but it is what it is. So with that being said, guys, if you got any more questions, I'll wait for about 5 minutes or so. Let them last questions get in there, and then I will let you guys go. Ask anything. What color's my Lambo? Pink. I don't own a Lambo. I don't like buying depreciating assets. You know what I'm saying? I have a house up north. I'm comfortable here in Florida. I'm okay. You know what I'm saying? I'm okay. I'm not super rich. I'm not wealthy at all. I drive a conservative vehicle just like everybody else, right? I like to buy appreciating assets. And I'm still young and I'm still trying to make a lot of money so I can leave it to my kids. So I'm still in my journey as well. I am not rich yet. I'm rich, but I'm not rich. Yeah, all right, guys. Well, you guys have a wonderful rest of your day. It looks like I only lost 20,511 frames during the session. So I don't know if I will be able to do an FX weekly outlook. If I don't, I will do it Monday morning. That's just basically what I've started doing. But hopefully it will allow me to get it out. I'd rather get it out this evening at the market open, because it is my favorite time of the week is Sunday evening. The market's open. So yeah. Plant Braid, I was just curious if you use a VPN or you don't worry about. No, I don't use a VPN. I want to stay as legal as possible, so that way when I do my taxes, I don't have to lie about where I made my money. And another thing, I'm going to talk about this later on, but there's there's a disclaimer on Binance's website that says if you are a U.S. citizen, and then it goes into a bunch of legal jargon, they don't have to give you your money. They will take your money, but they don't have to give it back to you. A bunch of people just lost a lot of money from this other app that they liked the app, so it was based in Mongolia or somewhere, and they were using that brokerage to buy and sell cryptocurrencies. And one day they woke up and all of their shit was turned into Doge, and then the next day it was gone and they lost all their money. So that's another reason why I try to stay as legit as possible. The bulk of my money is in FX, Forex. Oanda is a U.S. regulated broker. They have millions of customers with billions of dollars. I do not have to worry about them keeping my money, right? And if they do, I can go get them with a lawyer because they are a U.S. regulated broker. So with the crypto sphere, I do trade it and I am trying to accumulate stuff, but I'm trying to use U.S. regulated brokers. KuCoin is not a U.S. regulated broker. Kraken and Coinbase Pro are. So take that with a grain of salt, but I don't use a VPN. And I try to stay away from shady crypto stuff. My bread and butter's Forex. So I just own Bitcoin on a wallet, so that's safe. And ETH. But I trade the other ones. But with that being said, guys, have a wonderful day. The rest of the day, enjoy it. It's fantastic. If I'm able to get a good enough connection, I will jump back on at 5 o'clock for the Forex Weekly Outlook, and we will see you there. If not, I'll see you in the morning. Happy trading, guys.